Thank you so much, Gaetan, for this very kind introduction. We are actually very honored that Tech4Impact served as an inspiration for Space4Impact, and it's amazing to see how this event now is coming to life. And we had some very, very interesting speakers and panelists so far. I think it is very interesting to see how all of them emphasize the great potential that space technologies can have to advance a positive impact and to advance sustainable development. And what we will explore in this panel is, usually we have seen that traditionally space technologies are mostly financed by the public sector, but in the recent past we see that there's an quickly increasing interest also from private investors in space tech. At the same time, we see an increasing interest in impact investments, but both are rather niche investment cases so far. And what we want to explore in this panel is, could they actually be mutually reinforcing in a sense that can they benefit each other, and how can we bring different investors together to advance Space4Impact investments? We have a very, very interesting panel now with a very diverse set of speakers. I will quickly introduce each speaker and then we will jump into the discussions. We have Gareth Keane with us, who is investor at Promos Ventures, Mathieu Coste, partner at Airbus Ventures, Risto Veirinen, head of family business community at the World Economic Forum. We have Sven Lingjerde, managing partner at Reference Capital, and Philipp Schläger, who is corporate finance growth advisor at UBS. While Gareth and Matthew can be considered more as the experts on space tech investments, Risto is representing the impact investor side. And with Sven and Philipp, we have more the traditional investors represented, with whom we're trying to understand what does it need to actually mainstream Space4Impact investments. Let us start with Gareth. Gareth, you have just decided to launch a new fund focused on space. Can you explain a little bit what drove this decision and what excites you particularly about investments in the space industry?
Of course. Thank you, Julia, and thank you to the organizers for inviting us to participate today. So Promos Ventures is a very active seed and an early stage venture capital investor with a team based globally across the US and Europe. And we typically fund exceptional entrepreneurs and teams who are working on solving really hard problems using what we call deep technology or frontier technology. So we didn't set out to become very active space investors. It's kind of not an accident, but a few years ago, it became pretty obvious that there were really smart entrepreneurs using data from space to generate value for enterprises with really, really interesting products. And that sort of took us down the path into becoming a very active investor in the space sector. And since that time, if we look at our portfolio of close to 80 companies worldwide, we probably have 12 or 13 companies that we classify as space or space adjacent in our portfolio. And these range from launch, where we have companies like Rocket Lab, which has successfully launched 16 missions and put 95 satellites into orbit already. We have companies like Spire and ICEYE, both of whom have a significant presence in Europe, who are running constellations in low Earth orbit. And then a whole host of downstream companies that are using data from space to help businesses make smart decisions. And typically these are in sectors that have been maybe underserved by technology in the past. You could think about agriculture or transportation and logistics, manufacturing. So for us, really, investments in space, which need to be providing a healthy financial return for us and our investors as LPs, are really driven by sort of the ability to generate value in these sectors. So we do think there is a lot of opportunity there for us as investors.
Thank you so much, Gareth. I think it's fascinating to see how this develops and very quickly becomes a very interesting investment case. And we have someone else, Mathieu, who I would invite now to share his perspective a little bit on the same question. Investments in space are at the heart of Airbus Ventures. That's what you mentioned to me. And from your expert perspective, what can you share with us? What do you consider are the big current trends in space investment? And which conventionally non-space industry, Gareth already mentioned a couple, have the highest potential to benefit from space application in the near future?
Thank you, Julia, for having us today to participate in this panel. So to answer your point, I think space and adjacent technology is a trend as such. And then if we dig one step deeper, we could split that between access to space, the platform being in space, and services. And both three angles are heavily fueled by private and public money and currently growing. So if I start with access to space, we see some companies like Rocket Lab, just mentioned by Gareth, who is promisingly accessing space. We'll see Astra in the US with the next launch plan on December the 7th. You got ESAR in Europe. So beyond that, you got some deep disruption in the making with companies like Spin Launch. So this is driving a lot of capital. We can perceive that access to space will be much easier in the coming years with several offers. If you look at the platform itself, you see that all the components that make a successful, let's say, satellite or flying in space machine are doing good. We see propulsion systems for collision avoidance or moving payloads here to there, optical and communication payload that are driving a lot of capital, electronics as well. So all those sub-parts of the flying machine, the satellite, are being fueled by capital and promising technologies. And last but not least, which is the very important matter, is all what you can do with this space capability. And here you are more in a typical SaaS world or from data to insights. And this is impacting lots of industries. So we believe that mobility with automotive will be managed completely differently thanks to space as a capability that will enable new things. Rescue, industries at large, Earth monitoring is offering services from where can I park my car live to any kind of new things. And what's very nice in here is that it's far less capital intensive when the capability is installed, and anybody can come with very creative idea to offer services to business in the B2C world, but as well B2C. And this is driving a huge potential return for the VC we are, but for the global benefit of the users.
Thank you so much, Mathieu. Very interesting. I think this idea that access to space will become much more easy in the near future is something that will also drive further investments in this important industry. And I think this is where I would like to hand over the words to Philippe. Philippe, you have not been traditionally involved in, let's say, the space industry. Your strategic focus is on biotech, deep tech investments. What are the main challenges from your perspective? Because we've heard a lot about the great potential by Gareth and Mathieu that the space tech investments hold also when it comes to generating financial returns. What are the big challenges from your perspective in kind of getting involved in space investments? The floor is yours.
Thank you. Thank you for the invitation. First of all, is not investing directly, but we are supporting startup scale up in different sectors to find the right investors, private investors, client investors, sometimes also institutional investors. So that shows that in the space industry, the most challenge for private people is to understand first the technology and in what they invest, and that shows that it is better and easier to invest in sectors and technology we understand. And in the space industry, we do not have such a lot of private investors who have this know-how, and that show that one of the challenges for the private investors in the space industry is certainly to understand the technology and the purpose. The second challenge for the private investors in the space industry for me is to be patient, because they are much more long-time revenue cycles, and maybe so. Private investors who would like to have a return in 5-7 years maybe has to wait much longer. So that's certainly maybe a challenge for these private investors. And that's true that there are a lot of other challenges, but another one is also the exit strategy for the private investors who is looking, in fact, not only to participate to an adventure, but he has to want to have more cash and to have an interesting exit.
Thank you, Philip. These are for sure three very interesting points that kind of, at the moment at least, keep us from mainstreaming investments into space tech. And I think this is something where we probably need to have a couple of years longer so that we can build up this expert knowledge that you're saying is still lacking in many ways when it comes to space technologies. I would like to now hand over to Sven. Sven, you have been part of the investment landscape for over 3 decades. You have largely shaped the European tech ecosystem. How important is space investing in Europe today? And do you see any major differences, because you are also very much involved in US investments, to the US when it comes to investing in the space industry? What are the major differences when you look at Europe and the US?
Yeah, hi. Very good. Maybe just the positioning who I'm representing. Reference Capital is basically advising large family with their venture capital investment. So we mainly invest in funds. And then we also do direct investments. The company was created by Dr. Juan Rada, the first dean of IMD, in 1983. So it makes it the oldest private capital company in Europe. And so we invest in also directly in some space companies. For instance, in a private panel, you have Photon and Astrocast. These are 2 companies where I've invested. And we also work with experts in each of the segments of the industry that we're tackling. And for the space, we are working with José Achache as the responsible and our main advisors in that area. He's a former ESA executive. What is fundamental, to answer your question, what is fundamental to understand when we look at an industry segment, such as space, it's a notion of timing. When I started 30 years ago, the space-related technologies were not really VC material. They were more for space agency, governments, large companies, because of the huge capex that it represented for any project. So at that time, it was costing hundreds of millions to launch the satellites. I would say that 18 years ago, when Elon Musk started SpaceX, that ignited the first pre-revolution, I would say, of the space industry. And this is through a vision of privatization, reduction of space transportation costs, and which leads basically to commoditization of the space industry. And in 2017, the launch of the first reusable rocket represented really a big paradigm shift. And basically that opened completely a new area for the space industry. So I can say for VC timing for investing in space, I think it's now. There is clearly a window. There is not too much competition. And there are some explosion on number of projects. And this is really led by, I would say, the commoditization of the launcher. And if I can make an analogy with the internet, World Wide Web was basically enabled by the fact that internet was existing. So we are probably in space in the same time where there is an enablement and the commoditization of the launchers. And this basically, if we just look at the pure space area, it creates a huge amount of opportunities. I can, for instance, suggest that space communication is one of the huge opportunities. And there are many, many pieces that needs to be filled and now that are possible by the huge reduction of cost to launch. And if you've heard, for instance, one of our company, Astrocast, is now making a nanosatellite for a few hundred thousands. And this basically completely changed the paradigm shift in the IoT industry. So there are, VCs that can invest in hardware, but these are typically components rather than full system. And there are huge opportunities, and also there are a lot of software opportunities, like you've seen Photon, which I'm very pleased to be amongst the early investors. Regarding the difference between Europe and US, what I can witness is many European companies are leading the way in terms of engineering. There is a lot of a long tradition of space engineers and the defense industry. But typically, US companies have a more commercial-oriented management and are better in execution. So, and and they also in the US, you have probably more private investments. So therefore, I would suggest that blending Europe and US might be a very winning combination, because you can benefit on one hand of the technology developed by the European and basically access to market and the development of the company with the US side.
Thank you so much, Sven. I think it's very insightful. You mentioned repeatedly the notion of time that is very important when it comes to investment. What also stick very much with me is I think this idea that we can be complementary with the US in kind of pushing these causes. And I think what serves as a very nice transition to our impact investor on the Risto is you mentioned that the introduction of the reusable rocket was basically the paradigm shift went from public to private investment, and I think this whole notion of reusability also should strike Risto as something that he probably knows from his impact investor lens. And Risto, you focus your investments on impact. Can you explain to our audience in just a couple of sentences what does impact investing mean for those who are not that familiar with the term? Why does it matter? And then strike the link to what is the relation between impact investing and space investing from your perspective?
Thank you, Julia. I mean, defining impact in this very short space of time, it's completely impossible and daunting task. Impact is defined by whoever the player, whoever you ask really, but investment is return driven. So you look for return for your investor, monetary return, and then impact is something that the investor has to define for themselves. And for me, impact is defined that it also takes account of something else than monetary returns of your investment. And then looking as an investment portfolio, depending on the asset classes, you have to do certain compromises, let's say, in what level of impact you want to achieve. But I'm happy to return on that topic with a bit more time. But the fact is that impact is here. The tide has turned, or it has not only turned. We are talking about a real avalanche of interest and capital into the impact space. Great example, just a couple of weeks ago, UBS announcing that all their portfolios are now being driven towards ESG. There's also a lot of noise out there, but the real change is coming. And I just want to highlight also why is it coming, because the world is facing the biggest wealth transform in history. So 19 trillion of assets will be transformed from the baby boomers generation to the next generation. And looking at this scenery from the World Economic Family Community perspective, I can really see the change, and the future and current asset holders will claim impact as one of the first and foremost criteria, while still seeking market or close to market returns. When we talk about the returns, there is no any arguments left. There's 700 studies, there's meta studies of those studies proving that you don't have to make a trade-off between the return and the impact achieved. Another thing I want to say that really the role and the responsibility of the asset owner is crucial in this changing landscape. And a bit like the old state corporation used to have the mindset that we can do whatever we want as long as we give a little bit away on our philanthropic activities. In the end, we build that school in Africa, or we do something with our foundation. The mindset has shifted. So the corporation's role and responsibility is to take care of all the stakeholders while delivering that profit to the shareholders. And I feel the investors need to bring in the same mindset as well. And then when we talk about the impact and space, I mean, this is a real communications issue. We're sitting for where I am. Also for challenge for you guys to start communicating better. So space and impact is really, really daunting for us to come in. For me, coming from investment side and having a career investing, still entering this space is a jump for me. And so really building bridges. And I only realized this recently that I'm actually investing in very space-driven ventures, because one of the companies, for example, is looking on carbon capture using satellites in space. But that's just a challenge for us and you to make sure that you include this new and growing pool of assets that are out there that not yet engaged. But thank you.
Thank you so much, Risto. And I think this was a very concrete call to our other participants. And I will give back the word to Gareth, asking you basically, Risto just mentioned in many ways, maybe building this bridge between space and impact investments is a communication issue and requires much more emphasis that actually you also invest in impact. Gareth, could you share what role does impact play in your investment decisions and specifically in relation to your space investments?
Of course. I think you can think of that in sort of two different vectors that are quite closely related. Number one, we raise money as the venture capital investors from what we call our limited partners, who typically are large institutional investors. And they will often, almost always in fact, have an impact or ESG mandate in their investment decisions. So, we will be obviously prohibited from funding anything that involves child labor or, drift net fishing, all the sort of classic sort of big ticket ESG items. But there is sort of a general desire that investments we do make sort of contribute to or help to support things like the UN SDGs or some of the initiatives and goals the European Commission and the European Union has identified around ESG targets. On the flip side, I think for us, the impact of our investments is almost a de facto event in that the companies that we're funding are making great financial return for our investors, and they're making big impacts on industries. But the sort of benefit of this from an ESG perspective is just a sort of a halo effect that we get from the investments that we make. Like a good example might be agriculture. I think the UN FAO has estimated that something like 30% of the food that the world produces goes to waste, somewhere between the field and the consumer, whether it's lost in production, lost in transportation, lost at retail, or thrown away by the consumer because it's spoiled and has gone rotten. Any efficiency that investments that we make into the ag tech sector can bring to that sort of production and value chain will have huge knock-on effects for some of the sort of very important SDG goals, like removing world hunger. I think the UN again has estimated that if we save something like a quarter of that waste, hunger gets eliminated worldwide. So as we look at investments that we're making using data and sort of input from space, such as automated harvesting or improved efficiency around transportation and logistics and sort of the cold chain, value chain, all of those will have a huge impact sort of almost by de facto, by default, on some of the UN SDGs. So investments that we have made at Promise through our funds in companies like Swift Navigation, which is based in San Francisco, they're enabling agriculture and sort of large agricultural machinery manufacturers to be super precise with their GPS location data. And that, obviously takes a public good, the navigation constellations that various governments and organizations such as ESA with Galileo have funded over the years, and uses that data to generate value for enterprises and to sort of solve some of the issues and some of the challenges that have been highlighted by organizations like the UN with their SDGs. I think other examples would be companies, which with Mathieu at Airbus knows very well, like Spire, which is running a constellation of satellites, and they're focused on multiple different things. But they do everything from tracking maritime traffic using what's called an AIS transceiver to making data available to organizations and to governments and government organizations to improve weather forecasting and climate change response. So again, very, very impactful and very empowering for a number of the SDGs that have been identified by the UN. So I think, Julia, just to summarize, it's really sort of a halo effect of the strong investments we make from a financial perspective, that they have this sort of knock-on benefit, which our investors like, for the UN SDGs.
Thank you, Gareth. I think very insightful comments. And I'm wondering, you mentioned that for you, impact obviously plays an important role. You define impact also a little bit as obviously not investing in anything that has a negative impact. This is something you exclude ex ante. And you also mentioned that for you, impact is almost like a by default criteria. I'm wondering whether this really addresses Risto's call for the communication issue, right? He says to build bridges, we need to be very explicit that we actually invest in impact. And Mathieu, I'm giving this word to you and asking you, how do you see what Gareth just said? Is it also by default an implicit criteria, or is it something you communicate upfront? And maybe you can add some examples where you say we really strike a bridge between space and impact in our investments.
No, you're fully right, and I agree with what you say. First, with the Risto, I think we should be a bit more explicit in the way we craft that as a story when we discuss an investment. And to rebound on what Gary was saying, Airbus Ventures is a global early-stage deep tech venture capital firm. Playing in Americas, EMEA, and Asia Pac. And we do have several LPs. Airbus, obviously, is one of them, the corporate. But aside of Airbus, you got the Development Bank of Japan, or Mitsubishi, and other financial industrial institutions. And it's true that we do have a fiduciary duty toward them to give some cash back in a return. But first, none of those large corporates or financial institutions want to have their name linked with something that will be detrimental to the future. So this is why I'm saying it's a kind of underlying. Second point, as an early stage deep tech VC, we invest in companies and we stay a year, 5 years, up to 10 years in the boardroom. And if the service or the hardware you are developing or offering is surely but slowly destroying part of the asset, the business will not last for 10 years. So without this impact angle, investment will not be made. Let me take 2 examples, very extreme example on impact and financial return. The first is a company called Atlas AI. It's a spin-off of the machine learning laboratory of Stanford University. And what they do, they run analytics on space imageries to offer agriculture's insight and then infrastructure, and they're moving toward insurance and health management for some African countries. So the goal here is to help those countries to better manage their forecast and their policy for the good and for the sake of the country. So this is one extreme example, and you see that if you sell insights in an African country, you will make money, but maybe less than if you would sell that in McKinsey or other institution. But this is very much the path they follow, and it's so far doing very well. If I take another extreme, we mentioned access to space. So with new rockets being manufactured and shortly launched to space, on a daily, on a weekly basis, all those rockets are burning fuel. We invested a couple of years in a company called Spin Lounge, who said, we want to use kinetic energy to spin a payload and to throw it to space without engine. When the idea came on the table, everybody was thinking they were just completely crazy. But we never saw any law of physics that make this concept impossible. And today the demonstrators are growing. They are manufacturing their site in the south of the USA. They're doing good. And with a set of batteries on the side, you spin the payload super fast, you throw it to space, and when your machine is slowing down, it recharges the batteries, and then you can launch again with a very limited energy consumption, even from the electricity side. Bottom line, we could find a way to access space every 8 hours, whatever the weather, without burning any carbon-based energy. So this is not demonstrated yet. The company is progressing, but it's funded, and this could generate a strong financial return, changing the way payloads can be thrown to space while protecting the planet not to burn fuel or do whatever in the atmosphere. Just to give you 2 extreme examples of the kind of things we're doing.
Thank you so much, Mathieu, and Gareth as well. I think what you both highlight quite strongly is that you're already basically investing in Space4Impact, but maybe you're not upfront in saying this is an impact case, what we're investing here. And I would like to hand back to Risto to react to this. Both Gareth and Mathieu mentioned a little bit this, it's not a hard investment criteria, but it's implicit in most of their investments. Their most successful cases are actually having by default this impact dimension. Is this something where you say, is this enough? Or is this where you believe we probably need a much harder investment criteria? So impact as a harder investment criteria.
Julia, I lost you there for a minute, but can you repeat the question? I lost you there for a crucial 10 seconds.
Absolutely. I will repeat this. So basically, I just said for Mathieu and Gaet, they both mentioned the implicity of impact, that mostly impact drives many of the investment decisions already, without necessarily saying that this is a hard criteria upfront. They say that by default, this drives the success of the investment cases. And my question to you was, do you feel that this is sufficient, or is this something where you believe we need to have a hard evaluation criteria that says we have impact as a very important hard criteria in our investment decision making?
My advice or my position for both parties would not to approach and not enter the debate, what is impact and how do I measure impact? It's like talking about climate change to a party that doesn't believe in it. And then you can waste not just hours, but weeks or even a lifetime trying to convince somebody who won't be convinced. What I would say for the company seeking the finance is that list 1, 2, 3 max clear criteria how you actually achieve an impact and how do you measure. And when investors pour in money to your projects, then you can see that these are the concrete measures we do. Of course, at SDGs, what you have, those are crucial parts on communicating about that. But what investors want to see, that it is a real impact that led to measurable something that we can measure. So that's the side for the company seeking the funding. And for the investor side, so I'm not alone, or there's a growing community of investors who really think that this is an inbuilt default, and there is no question about it. So I would argue that going forward, whether it's 3 years or 5 years, this is just a default. You need to have this thing baked in. And when it becomes natural, and maybe there will be a measurable common metric that we can all agree on, but I don't see that happening. There has been many great trials. Everybody knows many of them, but we don't have a measurable black and white criteria for the investors to use that, yes, this fulfills the impact criteria. So we're not getting there anytime soon. But what we do get it, we are at already. There is a lot of demand for these projects, and mapping your proposals in a way that you can talk the language of, let's say, the long-term capital, the long-term asset owners, and family businesses and family offices. I think this should be your first priority, rather than trying to make sure that, yes, we are focusing on or joining forces with something that is too abstract for both parties, who often speak very different languages, to agree on. So this would be kind of my take on it right now.
Thank you, Risto, and I agree. We could probably discuss for hours the need for measurements and similar KPIs for impact. But I would like to open it up also for questions from the audience, because we received a couple, and I will address one to Philip. And I wanted to say that Risto mentioned that for the next generation, impact is a very important criteria for their investment strategies. Is this A, something you see in your clients as well? And B, the question from the audience, a lot of potential impact is happening in regions where traditionally not a lot of venture investing is happening, which is Africa or Asia. Are your customers willing to look at these regions, or are you looking at these regions as an investor? How is your perception on this?
Okay, thank you. So first of all, it's interesting your question. I just find some statistic in UBS with the investors' view on impact investment. It was in 2018, and it was funny. So 65% of investors believe that it's very important to invest in impact opportunities, but in fact only 40% invest really in impact investment. So it's really I think like this, but I don't do like this. But that's true that we think and we see an improvement of this percent, and we believe that over 50% of the investors will invest in impact investment opportunities. But something which is true that private investors will never focus on impact investment without considering the return, and they will never sacrifice the return because they are going to invest in impact. So that's what we see in this survey. But we see that this percent of investment in impact opportunities is getting higher and higher based on the past. At your question about investing in impact opportunities in Africa, for example, that show that in our business model, our private investors are investing in Switzerland, in Europe. But they will not invest in such countries. Maybe they will do it if they have the experience of these countries, or if they are coming of these countries, and they know about it. But that show that investing in these countries, it's completely different. It's another environment, and it's important to understand the environment mentality to invest in such companies. Our private investors are going to invest. They are qualified as professional investors, and they are going to invest really in what they understand and in what they believe it's going to be an interesting return. But maybe another topic, another point that show that for the moment, I think it's important to not to educate, but to facilitate that the private investor understand what's going on in space industry, in impact investment opportunities, and it's important to mediate and to show on the market what's going on and all the effect it's going to be positive on the economic, like all the startup and scale up in the space industry are doing now.
Thank you so much, Philip. And I think several important remarks. And one of the remarks that you raised is that in many ways, or at least there's a perception that return on impact, there might be a mismatch in the sense that if I want to have a quick return on investment, I might not get it with the similar high impact. And I think we have a very similar question from our audience. We have one question that says, from your perspective as an investor, what do you tend to prioritize, quick return on investments or innovative and potentially higher impact products? And I would like to ask this question to Sven, and Sven, maybe on top of this, do you believe that impact can actually drive returns, or is this the mismatch that we heard at least from some of the panelists that there might be a trade-off involved as well?
Okay, thank you for the question. Maybe I can just jump on the prior question by saying, for emerging countries, there are some very good groups like Seed Stars, which is based in Switzerland, which is doing venture capital investment in emerging countries. So they are doing a fantastic job, and anyone who wants to look at investment with impact should consider them. They are a very good group. So coming back to your question about, is there, if I understand, is there a mismatch between investing and in impact and making money? So the quick answer is no. But there is a but. It's a chicken and egg. Are the objective the impact, or is it a consequence? And I will illustrate it with a clear example, which is my first investment when I joined the VC industry in 1989. It was a company called Sandisk Corporation. And I need to take an example from the past because it's very important to say that impact is not only something from today. But before, let me start explaining how the VC industry works. So you have on one hand investors, LPs, who invest in funds, and they are committing this money for 10 years. And during that 10 years, the GP, the investor, needs to invest to deploy this capital and need to return the money. So what I want to say by this example is time is at the center of our industry. So where does impact stand here? Today, impact is very important for LPs, absolutely clear. specifically the next generation, but also for GPs. But in the vast majority of the project backed by the VC, they are investing because the money that invests in the company will improve the way things were. And we say something in venture capital, you invest in companies that does things 10 times faster, 10 times cheaper, 10 times better. And the impact is not measured yet. Impact is not new. And I will take an example and say, I think at the center of my answer is, it's great to say I will invest in impact, but you will measure it at the end. So if you have a plan to have an impact, and most of the startups don't execute exactly their business plan, and they take twice the time, then the question is it really the impact that you were expecting? So you have to measure it after. So let me come back to my initial investment in SanDisk, which was a leader in flash memory. It was a company with just a few people when I invested. And today, I could easily present it as it was an impact investment, because the company with this flash memory basically contributed to bring a revolution in the photographic industry and allow the disappearance of the chemical development process and all the bad things for the environment. So it had a huge impact. And it helped also to create a new digital photography industry, the digital music and all that stuff. So a huge impact. But it was absolutely not the idea when we invested in SanDisk to have an impact. The measurement was at the end, and then we could conclude that it had a big impact. So we need to be very careful with the statistics that people show that these are great impact companies, because often the measurement is after the facts. But what is, as a VC, we invest in companies, and the impact will only be measured in 5-10 years. So it is therefore very important not to forget that we are there for backing entrepreneurs. Those entrepreneurs live in the current world. Most of the young entrepreneurs are very conscious about the impact, and we should not basically distract them with only focusing on impact. They will do it by definition, because any technology that allows to create a revolution has an impact. And I can give an example. I mentioned the Dot Photon, which is one of my portfolio company, and I didn't invest in Dot Photon because of the impact, but they allow to transfer 10 times lighter images, and for the storage, it 10 times lighter as well. Huge impact for the energy. But this is a consequence, not an objective. So I just want to say that it is great to push the impact, but we don't need to overdo it, because in our world, in the venture capital, the entrepreneur basically are wanting to change the world. They know in which world they live, and they will have, by definition, an impact. And most of the companies in the funds where we invest, they have big impact, and we can go on and describe the impact. So net, I think it's something that is happening naturally, and we don't need to force it, at least in the venture capital. Large companies is a different ballgame.
Thank you so much, Sven, for this very extensive and insightful answer. We're at the end of our panel, and I just wanted to very briefly recap. I think what we've seen is that space technologies offer a very interesting investment case. We have seen very exciting examples, particularly by Gareth and Mathieu, who mentioned that this is actually an upcoming industry that we should all be looking at. We discussed also this question, impact and return on investment are the trade-off and mismatch. And I think what we discussed is there is no mismatch. And in fact, in many ways, impact is implicitly driving return on investment, but not necessarily as a hard criteria. But this is something to be on the look, because there's more and more demand also from private investors to invest in impact. We highlighted, I think, one important aspect, and I think this is where I will close, is we're still having some difficulties in measuring impact. We did not extend on this discussion indefinitely, but as Risto mentioned, this is an ongoing debate, and it's still difficult to say what is impact. And Sven also highlighted the difficulty that we can only measure impact rather a couple of years later, and this is something, a time delay that in the investment space is not really perceived as ideal. And with these couple of thoughts, I will leave it up to you to think about space for impact investing, and I'll hand over to Gaetan again, and wish you a very nice day.